Hello and welcome back to Bunnex Investment Group. Today we are going to be talking about a powerful entry technique that you may use in your trading. So before we jump into the whole video, I'd like to make an announcement that on 12th and 13th of October, we are going to hold a masterclass whereby we'll be teaching the updated institutional market maker method, as well as introduction of our new trading template. So this masterclass is going for $150, and you may make more inquiries using the link that I'll put in the description box below. You may as well check out our free Telegram channel. The link is right there as well. So before wasting much of your time, let's actually jump into our today's content. So our technique that we are going to be describing today is a simple technique that is actually derived from price action concepts. It's something that will help those who cannot catch the peaks of the market, which is basically the ultimate market reversals. So if you cannot pick the market reversals, it will be better for you to actually wait for the market to provide you or show you a trend. So in basic forex terms, we would say that a downward trend looks like this, whereby we have lower highs, lower lows, and lower highs, like that. So in this case, we are saying we had a flow of the market, a lower high, a lower low, a lower high, and a lower low. Then if we are in an upward market context, we would say we have a higher high, a higher low, a higher high, a higher low, like that. So this is just a converse of this form. So if we have these formats, catching these points are what we call trading off the peaks. But in some instances, you may find it difficult to get your trade at these regions of the market. So if you see that this is difficult to get your entry at these points of the market, you need to wait for market behavior to be issued. So what is market behavior? Market behavior is actually issuing a complete new structure. So in this case, we would say the market was in a prior upward move, whereby we had something like this. The prior move to this current move that we can see was an upward move. So breaking or introduction of a new trend is actually what we call break of structure. So in this case, this was the last lower high of the prior move. So breaking of this last lower high is actually a significant sign that we are now in a new trend. So this move is actually market behavior showing us changing of trend. So whenever we see the market going beyond the region or the point of the last lower high of the prior move, would call it break of structure. So in this case, the market has broken structure. So creation of this new lower low and this new lower high is actually something that can actually show us we are now in a downward trend. So the first thing that we have to see is actually 1, break of market structure, 2, creation of the new lower low and new lower high, and then 3, let's proceed, we need to see break of this new lower low to create another lower low. So in this case, our entry point, right, will be on the perceived new lower high. So we always enter at the 30 point, whereby we've seen behavior change, break of structure, and then creation of the new point in market continuation. So the new point is actually anticipated at the new first lower low. So in this case, it's actually break of structure, creation of new lower low, creation of new lower high, then break of the new lower low to create new lower low, then retest of the first new lower low. So it's 1, 2, and your entry will be a 3. So same applies at this point. We are saying in an upward market context, we obviously had the last lower high. In this case, this is the last lower high, and on that last lower high we had break of market structure, right? Creation of a new higher high, which is actually a sign that we are making a new trend, creation of a new lower high, then break of this new higher high to give us this point. Our perceived point of entry is actually this retest of the new higher high. So that's basically the same as what we've just been saying. So in some cases, we have a point whereby the market actually breaks this point, create a new higher high, create a new lower high, and then create this higher high. But whilst we are waiting to see a point of entry or a retest of this zone, would see the market actually not coming back to the point that we expect. So if this happens, we would expect to see a NW pattern if we are in an upward trend, or an M if we are in a downward trend. So it will be this kind of setup at this point, usually a lower time frame of what we are observing the market from. So basically, this is what we are going now to apply over the charts, right? So in this case, this is gold against USD, and what we have been discussing, we are now applying it on real market data. So in this case, we can see that we had a prior move. In this prior move, we had lower low, lower low, lower high, lower low, lower high, and we had the last lower low at this point, last lower high I mean. Then from this point we can see a move that went up, right, breaking the last lower low of the previous or the prior trend. So this actually was this move where I've indicated using this arrow is actually telling us that the market has changed its trend, but it's not yet enough for us to enter that market. Even this pullback, we need to enter on the second pullback so that we'll confirm that the market is now actually in the right or in the new trend. Then after that, we can see this arrow actually showing us that the market has broken the new higher high in this case to create another higher high. And our main point that we are interested in is retest of this new higher high. That is why you can see a 3.85 reward to risk ratio trade actually taken at this point. So this was actually a trade that came after a retest of this new higher high. So someone may ask, how do you actually enter the market when it comes back to this region of interest? It's actually another topic for another video, whereby I'll actually teach you what to look for in the zone, exact zone of entry. So I've marked another example so that you may see these break and retest. So in this case, we may see that the market actually had its last lower high at this point, and this last lower high, we were not interested in taking this peak, but waiting to see the market changing. As you can see, we had a break of the last higher low. Then after break of that, the market pulled back, but we were not interested in taking this trade. So normally we were going to wait for the market to actually retest this zone, right? This is what we were waiting. But as you can see, the market did not retrace back to this point and actually took off right where it was. So this is the point where I was saying that it actually occurs in the markets whereby the market will not come back to the zone that we expect to see it reversing. But at that point or at that zone, we may see that we were issued a W. If we are to go on a smaller time frame, we would see that this was a perfect W for us to enter the market. And in this case, we had a 2.95 reward to risk ratio, and the stop loss will always be below structure. So the recent point of entry on gold could actually be taken using the same concept. In this point, we had the last lower high. At this point, the market actually broke that last lower high, then it retraced, creating a new lower high in this new trend, then a new lower low in that new trend. It broke that one, and as I said, we wait for the second retest. In this case, we can see that the market went down and it came back up, right, to retest this new lower low to give us an entry point using our criteria, and one could actually go short at this point, reaching this zone. So that's how you may apply this if you cannot catch the points where the markets ultimately reverses. And as I've said, we have an upcoming class whereby you can learn as well how to catch market reversals, ultimate market reversals, and make advantage of the world trends. On that note, we come to the end of our video. Thank you for watching. Like and subscribe, and don't forget to check out our free Telegram channel. The link is right below.